Yo, what's good guys? Welcome back to a new video. Inside today's video, I'm going to be giving you guys a breakdown of the past week's price action that we just had, which was the week commencing 16th of March, 2026. Basically, I'm going to be showing you guys exactly, all the trades that I took and the reasoning behind most of the price movements in price through the lens of quarterly theory and also candle closures and also the true change in the state of delivery. Okay, so yeah, with that being said, let's just jump straight into it. A nice little raw video, all no edits here, just my thought process and the reason behind all the movements. Okay, first of all, let's start on the calendar, so the forex calendar, and kind of see the news events for the week, the days where we could have expected volatility, the days where maybe we should have stayed away, and all that type of stuff. Okay, so looking at the calendar, as you can see, Monday, Tuesday both have no news. Now, no news days don't mean that you can't trade. It just means that you need to be a little bit more cautious because price may not have as much volume. It might not be as volatile. Price may be a little bit more choppy and just like overall not really expanding to targets as you would expect them to on a news day, for example. Okay, but that doesn't mean that you have to stay away completely. So Monday, fine, tradable, no news, whatever. Tuesday, also no news, would normally be tradable, but look at the day that is occurring after that day right there. Wednesday, PPI and FOMC in the same day. This is literally unheard of. I don't think this has ever happened before. I think it's due to the fact of the government shutdown that we had I think it was like last month or the month before. It's kind of messing news events up a little bit. They're not releasing as normal schedule because PPI is usually after CPI on the second week of the month. But yeah, looking at this, we obviously know this is going to be an insanely volatile day, right? So the day prior to an insanely volatile day tends to chop up. It tends to build liquidity for that news day to just come and just wipe out all that liquidity, basically. Okay, so Tuesday, looking at that, I personally wouldn't have traded. I didn't trade on Tuesday anyway because that was the day that I actually flew back from Thailand back to the UK. I'm back home, back in the UK now. So yeah, hopefully you guys did enjoy the Thailand vlogs content out there. But now we're back here, locking in with the educational content for you guys. So yeah, it's going to be great. Any ideas below, let me know in the comments. But either way, yeah, I would not have traded this day. I didn't trade it anyway. Then the actual Wednesday itself, it can be tradable. I would have wanted to position myself before the release of these news events, to be honest, because price action right after them probably would have been choppy, especially after the CPI one, because CPI would release it, do its thing, just trade higher, lower, whatever, and then most likely just chop, and wait for the second news event to release. Okay, so I would have positioned myself before. I don't trade there at that time anyway, but that's what I would have done. So my 9 to 10:30 window here probably wouldn't have been the cleanest. So would be keeping that in mind if I was to trade this day. I don't remember if I did trade this day. No, we did trade this day, but yeah, I didn't take any trades on that day. Thursday and Friday were the days I took the trades. I took a win on Thursday and a loss on Friday. So I'm going to break those both down for you as well. Thursday, cool, fine, nothing special. 8:30 news, tradable, fine, nothing to worry about. Friday, no news. Again, would have preferred news, but it's not the end of the world. Doesn't mean you can't trade it. Okay, so yeah, looking at this, we definitely expect Wednesday to be that most volatile day. Would have probably expected Wednesday to be our high low of the week as well, but I don't think it ended up being so. But yeah, so there's kind of how I viewed the calendar itself. Now coming to the charts, how could we have established a bearish bias? How could we have knew price was going to go lower this week, right? Very simple, candle closure, okay? This is the first thing that we could have used looking back upon the previous week's close. So if we're trading this week here, Monday the 16th of March, how did the 9th of March weekly candle close and how can that give us information on the new week? Okay, well, let's mark out how it closed in comparison to its previous week as well. So this weekly candle closed below the 2nd of March low, okay, the wick. So this body, the close of this candle, closed below the wick of the 2nd of March, okay, on NQ, also on ES right there, and also on YM. So every single candle here is showing us a continuation candle signature to the downside. So where is our main target coming into this week here? Monday the 16th of March. It is the previous week low. That is almost our like guaranteed target. Obviously nothing's guaranteed, but when you have established the candle closure, whether it's bullish or bearish, the main target is always, if bearish, the previous candle low, if bullish, the previous candle high. Okay, so Price takes out the previous candle low, and we'll get into, what to expect after that in just a moment, okay? But I do believe this week that we just had, I think we opened up and hit that target pretty much immediately from the end walk, if I'm not mistaken. Or did we not? No, okay, we didn't. Not on any asset either as well. So this is our previous week low down here. We didn't end up taking it on YM until Wednesday, so a little bit earlier on. So we did have a monthly cycle at some point during the week. So I'll show you guys as well how you could have known that it wasn't going to hold in just a moment. So this is great. So literally every single day, like coming into this trading day, we would have been ideally trying to trade towards that previous week low, okay? Obviously, if we're bearish on the week and we want to see the previous week low taken, what does price have to do before it goes lower? It goes higher every single time. Unless the candle prints with no wick on its high at all, then we wouldn't expect that. But it did, okay? It did print with a wick. Also, if we take a look at ES and also YM, right? If we mark out their Monday's candles right there, okay? We zoom in. Did we actually have a wick? No, we didn't. So, right, look at ES here, guys, okay? Can you see that? This is Monday's candle. This is the start of the new week, the week that we're overviewing right now. This weekly candle didn't have a wick on the low at all, and neither did it so on YM as well. If you remove this, as you can see, no wick at all, okay? NQ had a very small wick, so that's fine, but two assets out the triad had no wick on the low. What this is a wickless candle, and what this means is if you guys go back in your chart, literally look at all these candles here, right? What do they almost all have in common? They have a wick on the high and a wick on the low. You can't spot one here that doesn't. Look, you literally can't, right? I don't see any. Even that's got a very small wick there. Wicks. Even if it's very small, it doesn't matter. And obviously these wickless candles closing with no wick isn't impossible. But looking back upon the previous candles, it's literally like a 5, 4, maybe even 3% chance of a candle closing with no wick. So with that in mind, if the candle that we're trading has no wick on the low and we're just trading higher, what does that tell us? It means that we can look for shorts at least to that weekly candle open, okay? So two confluences right there for our bearish buyers. No wick on the low for both ES and YM. And obviously if ES is going to want to put in a wick, NQ is going to follow lower. So overall bearish bias. Previous week low is still intact, which is our main target for the week due to the previous week's candle closure. So all we're doing now is literally looking for any reason to get into a short possible, okay, towards that previous week low or towards that weekly open. Once those targets have been hit, then we can reassess, okay? So let's remove the drawings for now, right? And now what we're going to do is scale down and go through our cycles and see what the cycles could have told us. Firstly, let's look at the candle closures for the week, actually. We'll stay on the daily chart and kind of go through this here. So as you can see, Monday's candle did open up with an M walk to the downside, but immediately recovered, brought it back higher. So how did Monday close? It took out, this is obviously a weird candle. Like this would usually be a wick below the previous candle low. But obviously with the M walk open up below, it looks weird because it opened below essentially. But either way, it opened below, but it didn't close below. Okay, so at some point of Monday, we was below Friday's low, but we didn't close below it. So we pulled all the way back up. Technically, we did take out previous day high and then also failed to close above there. So this would have been both a bullish and a bearish reversal signature. Although just on ES, it didn't take out the previous day high, so it would have been just straight a bullish reversal candle signature to the upside right there on ES. But either way, using a bit of logic, does this candle closure for Monday look bearish at all? No, definitely not, okay? So our main target for Tuesday would have been targeting Monday's high, right? And as you can see, Tuesday did indeed hit Monday's high on both NQ, ES, and also YM, if I'm not mistaken. Yeah, okay, cool. Now, what did Tuesday's candle closure tell us? This is a bearish reversal signature to the downside because it took out Monday's high, but it didn't close above it. So our main target for Wednesday would have been Tuesday's low, which yes, we did end up taking, but we actually took the previous day high first as well before we target the low. Now, how could we have seen this coming? How could we have anticipated that this would happen? Because usually we just expect previous candle low just to get delivered to you straight away, okay? The reason is, look at Monday's high and look at Tuesday's high. Do they have an SMT? No. I thought I turned my mic off. Do they have an SMT? No. Tuesday ran out Monday's high on NQ, ES, and also YM. Okay. So what do we also know using quarterly theory? Most of the time, cracks and correlations, sequential SMTs more specifically, will mark your highs and lows of the cycles. So in this case, this is the weekly cycle, looking at the daily candles. There's no weekly cycle cracking correlation on the highs to make sense of that move lower, okay? So yes, the candle closure is telling us bearish, but it's not supported by a cracking correlation. Now, what happened here on Wednesday? Well, we ended up taking out Tuesday's high, okay? We ended up failing to close above it, and we also closed below Tuesday's low, all in one. So this is both a bearish reversal and a continuation candle signature all in one, which by the way is already like the highest probability bias candle that you can get. Like you can almost guaranteed expect this following candle to deliver down to the lows if it's bearish. But we actually now have a reasoning for a high of the week, because look what this candle did. It actually formed a bearish weekly cycle sequential SMT. ES and NQ took out Tuesday's high. Right, if we mark out Tuesday's high on YM, did YM get above Tuesday's high? No, it did not. So now, not only is the candle closure signature telling us lower, but the cracking correlation is also telling us lower. So with these two combined, which is what my main strategy for finding daily bias is, cracks and correlations and candle closures, once they all align, our weekly draw on liquidity then becomes insanely clear to trade to. And all we're doing intraday is looking for literally my entry model within my specific time window to just get into a short, like short every single day of the week, short here, okay, down to the previous week low, okay. Now that's the candle closures for the week. As you can see, Thursday's one did technically also close as a bullish reversal signature to the upside. The candle closures on their own, not necessarily too clean when you're inside of this type of range bound price action, can be pretty unpredictable. This is why I like to combine them with the cracks and correlations, right? On these lows here, there was no cracking correlation. Literally, Thursday took out Wednesday's low on all assets, right? So to me, that candle closure didn't really say, oh, I'm bullish here. Like the draw was so close by. Yes, it was Friday, this day here. We could have expected it to trade higher. But I wanted to see the draw hit before any sort of pullback back into the range, okay? Now, there was actually a cracking correlation on these lows here with this candle closure. It wasn't weekly, it was a monthly cycle. So we can actually use a monthly cycle, but why were I not bullish here? Or like, why did I not want to see higher prices? Well, let me show you guys why. So let's firstly mark out our monthly cycle sequential SMT. Let's see when it first formed, okay? So it was formed off this candle here at 6 a.m., right? Off using ES, okay? It's formed a little earlier here using YM. So now we're going to be talking about the true trend in the state of delivery, the TCISD, right? So technically, this is the first candle that ran out the lows here across the triad. So initially on Wednesday, this candle here would have been our TCISD candle. So essentially the first candle that creates a sequential SMT is our TCISD candle on all assets, that same time candle, mark at the open, wait for a close above, okay? However, excuse me, if the sequential SMT is formed by YM, right, and then we have either ES or NQ then drop down below the low and like essentially form the sequential SMT again, then we can use the newly formed sequential SMT candle, the TCIC candle. We can use that one essentially, okay? As you can see, ES here took out the previous week low off the 6 a.m. candle on Thursday. So now instead of using this one that we were speaking about earlier, because we formed a new fresh one between ES and NQ, we can then use this candle here, okay? So 6 a.m. on Thursday was the very first candle that ES ran below the previous week low on. So we can use that candle as well on NQ. So 6 a.m. Thursday, what do? We mark out the open of that candle. And once price closes above it, we then have a bullish 4-hour TCISD to indicate higher prices, okay? Did price ever close above it? No. Okay, price never closed above it. This isn't a closure above. This is the open. This is a bearish candle. This is the open, the top. This bottom is the close. We never ended up closing above it, okay? That literally was my plan of action. Like, I did say to my Discord when I did posted the outlook for the day, the upcoming day, if price is above the 4-hour TCIC on the day, I can see higher prices here. If it doesn't close above it, lower, 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 lower. Okay, so coming into our window, there was no reason, to take a long if we weren't above it. So if we're below it, look for shorts only. Okay, so that's why I still remain bearish, even though we had the monthly, we had the Thursday daily candle closure, etc. Okay, so now let me jump into the trades that I took. I took a trade on Thursday, so this was within, of course, my 9 to 10:30 window every single day. So let's go and see what it was. I can't actually remember what it was. I think it may have actually been, let's see. So this is NQ, this is Thursday, this is Q3. So you can see there's nothing here on the 90-minute cycle. Let's see if there's anything there on the daily cycle. Let's go to Thursday, type in 09, boom. Okay, so I can see this. This is within PM session though. So no daily. Oh, I actually remember exactly what this was. Yeah, and this was a long that I took on the day. Reason for this is because Thursday had already taken previous day low. We're below London lows. So as you can see, Q3 below London lows. Also, you saw there was no 90-minute because we'd taken out Q2 lows on all assets. Also, if we go to the micro cycle, oops, you can see down here, you see price all the way down here. We're even below Q1's low. So we had no bullish sequential SMT on the daily, the weekly, the 90, or the micro within my window. What this means, if you guys watched the time-based premium discount video recently, if you're below the previous quarter low in comparison to whatever cycle you're looking at, in this case, every single cycle, we're below the previous quarter low on every single cycle. This means we're at an extreme discount, okay? And this is my only rule as to when I can take a trade opposing where I think the higher time frame is drawing to. If price is heavily expanded to one side prior to my window, which as you can see, look at this huge drop down. No sequential SMTs on the lows. We're below previous quarter lows. So this means overall, yes, a continuation because there is no higher time frame bullish crack to reverse price all the way back up higher. But we can at least catch a short-term retracement back higher into the unfilled gaps or back to the previous 90-minute quarter high, for example, to then get the bearish crack to then continue back lower, okay? So with this in my mind, all I now need is a very small, minute cracking correlation to allow and make sense of a retracement higher, okay? Now, 930 just dropped straight lower. Didn't form any cracking correlation on these lows here unless we go to the 15 second, okay? 15 second is for the nano cycle, if you guys didn't know. And this is obviously the one cycle below the micro cycle, okay? So we're below, in comparison of the nano cycle, we're below the previous microcycle quarter's low, which is Q1's low, which was around here. We're below it, so we're at an extreme discount. We then form a bullish nanocycle sequential SMT. As you can see, NQ runs out Q2's low. ES fails. Which candle first ran out the low? It was this one here, right? This bearish one at 935.45. We mark out the open of that candle. Once price closes above it, which happened at 937.45, longs are now activated, okay? Don't need anything big, just maybe a small move up to this high, or, maybe even to the top of this gap, whatever it may be. Because if I'm entering down here, look at the amount of ticks price is giving me in such a small time. 270 ticks in a very small time, okay? Now, I do like to enter with the TCIC retest. It didn't happen in this scenario. Price did not come back into it, unfortunately. So I went back to the 1 minute, and essentially I just waited for a 1 minute swing to form, and then I timed the 1 minute open, low, high, close perfectly, and just took the entry, essentially. So the nano occurred somewhere down here. Then you can see here at 9:40, this is the open of the new 5 minute candle, by the way. So 5 minute closed as a continuation candle signature to the upside. Then the new 5 minute opened, expecting another bullish candle. 9:40 open low for that first minute candle, formed a swing point, and then I entered here at 9:41. I waited for price to put in a little low and then begin trading higher towards his previous candle high. Took my entry around about here. Stop went just on this low down there. I could have literally even placed it there. Like, it doesn't really matter, to be honest. It's not on the invalidation, I know, but because it's just a retrace, I want the retrace to be fast. I don't want it to even come anywhere back down here if it's just a quick retrace higher, okay? And then essentially all I did was literally target like roughly around there for like a 1 to 1.5. I think it was a little bit more. It's like a 1 to 1.8. So obviously not the best RL, but look how many ticks it was. Like, look at that, 240 ticks in literally like a few minutes. I'm not going to complain with that. I'm going to obviously take that, right? And yeah, that was essentially my first trade right there of the week on Thursday, because Monday I didn't take any trades, just weren't too clean. Tuesday was my traveling day. Wednesday I did get back home on Wednesday, but I didn't really see anything. Actually, I wanted to take an entry, but it was a few ticks away from my entry, so I didn't end up taking anything. Thursday, this was the first trade of the week, clean, very nice. And now Friday is actually a pretty unfortunate day, I'm not going to lie. If we start on the 15-minute again and work our way down, daily, 90 and micro, see where we could have taken an entry. Friday was actually very unfortunate. We actually ended up taking a short. And do you guys see this top here? We got stopped out by like 2 singular 1-minute candles. And then this huge drop happened here, okay? So very unfortunate, but it is what it is, you know, because I had good risk management and RR. Obviously, I just lost 1 R on this and made like 1.9 R on the initial trade before, the day prior. We still ended the week green, but yeah, let's go with this losing trade here. Losing trades are always helpful as well. To be honest, this to me was like an A+ losing trade. It was just one of those ones where it just happened. Like, I didn't do anything wrong. It just happened. So 15-minute, as you can see, no daily cycle here on the highs. Cool, fine, nothing there. 5-minute, keep in mind I'm looking for shorter here because I wanted to see that previous week low still taken. 5-minute, as you can see, we ended up getting a 90. Now, let me put this in replay so you guys can see what was going on at the time of the entry itself. So let's say around about here, okay? So the first candle of Q3 opened up, it formed a bearish 90, okay? So I'm coming into my window now, 9 to 10:30, seeing I'm wanting lower. We have a bearish 90 within the very first candle of the quarter that formed it. ES7 took the high. Okay, this is not a very high probability failure swing because it's essentially equal highs, but YM's one was pretty nice right there, okay? TCISD confirmed because this candle created it, but this one closed bearish. We must use a bullish candle in a bearish scenario, so we use the most recent bullish one. Mark out the open, price closed below it at 905, right? And then it also formed a very beautiful 5-minute gap overlapping with the 5-minute TCISD. Also, if we go to the 1-minute, look what else we had as well, guys. We had a very nice microcycle bearish as well with a TCISD on the highs. So all I waited for price to do, come back into this gap, come back towards the TCISD and look for a short, okay? So if I let this play out, as you can see, it was a wickless candle that I entered off as well. Yeah, so it's literally this one here. So we had no wick on the low. I just essentially anticipated price to come back down, put in a wick on the low. So I did enter right at the very top. Stops were like around about here. And then I was more or less, you know, targeting down below these lows or something for like a 2 to 3 hour R, okay? Now, unfortunately, this candle did close with no wick on the low. Price just continued ripping higher. We had my setup, we had the sequential SMT, we had the TCISD in line with the bias, but if we go back to the 5-minute, you see this gap here. Fortunately, just didn't hold. Nice reaction there, it was looking good. And then again, we just got absolutely destroyed by another wickless candle here. So as you guys can see, what we spoke about at the start, like it's very rare for these wickless candles to form. So it was just like super unlucky that it formed against me in the beautiful short setup that I took. But then 9:30, this was 9:20 actually, sorry. I think we continued, maybe, did we go a little bit higher? Yeah, so then the 9:30 candle went a little bit higher, essentially ran out this high again, but we did actually hold a bearish 90-minute sequential SMT. So if we're looking at the closures, highest closure there, we closed above. So this is Q2's highest closure. And if we look at ES, highest closure of Q2, we never closed above it. We took out the high, but we didn't close above it. So we have the divergence between the bodies, hidden sequential SMT. And then from there, as you guys can see, we did end up just absolutely dropping right there. Very annoying. We did get another micro, but I think it got cancelled out. Yeah, no micro up there. And then we just dropped. Okay, so yeah, you guys see how pretty unfortunate that was. We like entered around here. 5 minutes later, we ran out the highs and then it dropped. But the thing is, this is when trading tests you as a trader. It tests your patience, your FOMO, your psychology and whatnot. Because seeing this form right after you get taken out, it can be annoying, right? It can be annoying, but this is when you just got to learn to just stay grounded, just close down the charts. It's fine. These things happen. It's just the statistic of your model. It's not going to win every time. There's a reason why it's not 100% win rate, because things like this do happen, So yeah, just got to accept it. Nevertheless, either way, for me, it was a pretty hectic week. It was kind of like packing up from Thailand and traveling back home and seeing friends and family and whatnot. So it was a pretty hectic week. So for me, this wasn't like the best of weeks by any means, but yeah, it was okay. We still ended up green. Still a great week overall. I'm ready for the new week ahead of us as well. I'm ready to finally, lock back in with the content for you guys as well in terms of like the educational videos. But yeah, I'm glad that I got the vlogs out when I did. Hopefully you guys could see, the different side, the other side to me, the lifestyle, the personality and whatnot. And yeah, hopefully you guys enjoyed those videos. Hopefully you guys enjoyed this video here as well. But yeah, like I said, any other sort of educational content video ideas that you want to see, maybe it's like another sequential sub T video where we just go even more in detail into it, the kind of like ins and outs of it, PSPs, whatever that may be, maybe more about my model. Anything like that, let me know in the comments down below. And also, I'll leave a link to my waitlist, to my one-to-one mentorship. If you do want to work with me one-to-one directly, there's a waitlist right now. You can apply and potentially get accepted. And then, yeah, we can work together, as well as my other links to my indicators, my premium group, so you can trade live with me every single day, analysis, etc., etc. My social medias, and also my free Discord community. And then also my prop firmio website, so you got all the best prop firm deals and discounts, while also getting points that you can claim for like rewards, merch, discount codes, coupons, gift cards, all that good stuff. Okay, so yeah, with that being said, we're back, we're locked in. Hopefully you guys are looking forward to the content that we're coming out with soon. And yeah, with that being said, enjoy the rest of your days. I'll see you all in the next video. Peace.